Hi everyone, welcome to the Digital Fifth Fintech Show. Today we have with us Prashanth, who is the CEO of PayU Credit. Earlier he had founded Paysense, which was sort of merged and taken over by PayU Credit. One of the smartest individuals I've ever met, very deep in technology, and obviously his business sense is amazing. So I'm so happy to have him on board. So thanks Prashant for joining us. And as we have been talking, maybe it's important for all of our reviewers to understand what exactly are you up to in PayU Credit, and a bit of a journey about PayU and Paysense and everything else.
Sounds good. So I'll quickly introduce myself, give you a little bit more context on who I am and the journey I've been on, and then we'll talk a little bit more about PayU Credit and what we're doing. So so I formed Paysense in 2015. The idea of forming Paysense was hot on the trail of all things e-tail, which was, if you remember, 2015. Everything was going digital. Everything, you know, it was the era of Amazon and Uber and Ola and Tiny Owl and Housing.com, and everyone was doing everything digital all of a sudden. It was a bit of a boom period. And at that time, I was still at PayPal, and I was looking at India very closely, and I was thinking, man, there's so much happening in e-tail. This is a perfect opportunity to disrupt, you know, how people, you know, pay for things. In fact, the very first thing I wanted to do when I came to India was actually build a buy now, pay later company. And quickly landed on soil and then realized that, man, buy now, pay later is really hard for a startup. So we pivoted to doing personal loans and built a lot of very interesting innovations on the back of a personal loan platform in combination with various partners like India Infoline, Fullerton, Northern Arc, etc. Prior to that, I was, like I said, I was the head of product for PayPal in Asia Pacific, and I was looking after India, China, Southeast Asia, Hong Kong, Korea, Taiwan, Japan, and Australia. So very diverse markets, but if you're PayPal and you're looking at this part of the world, it all looks pretty similar. So they just said, oh, one product manager should be able to manage it all. But very, very diverse markets. In fact, I think what works in India doesn't work in Indonesia, and what works in Indonesia doesn't work in Vietnam. We're in a very, very interesting and diverse market space. Before that, I was head of new ventures risk for PayPal globally. I built their first consumer credit, as well as their merchant credit product as a part of that in that role. So phenomenal ride. I've always been an entrepreneur. So Paysense was actually my third startup. My first startup I'd built was a company called Say Now, where I was on the founding team. We sold that to Google. My second startup was a company called TrueV Security, which is a mobile payment security company, which I sold to PayPal. And Paysense, until recently, was my third startup, which we sold to PayU in December of 2019. So coming to PayU Credit, so today we have two products. One is LazyPay and one is Paysense. LazyPay had perfected the art of buy now, pay later, merchant checkout financing, and some beautiful innovations around convenience, right? And Paysense had built this muscle of being able to take a consumer and meet their affordability needs. So while on one side, which was my lifelong dream, or my 2015 dream of building a buy now, pay later, someone had built it and I basically inherited it beautifully 5 years later. On the other side, I had the Paysense asset, which had perfected the art of alternate lending. So people who didn't have a very well-established track record on the bureau, people who didn't have very high bureau scores, and were looking to avail cash loans for various personal needs. You know, I was able to bring those two together. So that's the journey we're on. Of course, now we are a 450-person team, fairly robust across the organization. We've come together as PayU Credit. The way we are thinking about it is, look, on the backs of our merchants like Swiggy, Zomato, BookMyShow, Hungerbox, IRCTC, etc. We today see a few million consumers every day. Now, the last few weeks have been a bit of a blip, but we'll come back to a few million consumers every day. So that's a phenomenal flywheel to acquire consumers at scale. Most of those consumers are interacting with us for a convenience product, right? Which is the buy now, pay later product. And on the back of it, once they get used to buy now, pay later, they never quite go back to kind of paying with their old kind of credit card, debit card, unless that's rewarded, right? So that's, of course, hard to compete with all the rewards that are sloshing around in the system. But for most consumers, like for example, on Swiggy, the best way to pay with, on Swiggy is to use LazyPay. And I say that because even from my PayPal days, I remember this mantra: the best payment experience is no experience. And that's what we're delivering to Swiggy every day, or Swiggy customers every day on the back of LazyPay. Once a consumer is on the LazyPay platform, we then systematically learn more about them. We enhance their credit lines. We take them through a journey where they can then avail new formats of credit. And there's a few that we're going to unveil in coming weeks. As well as cash loans, right? So we've kind of integrated the PaySense cash loan engine into the LazyPay app, so consumers can avail a cash loan within minutes, right? So they can open the app, they can get pre-approved, they can click a few buttons. If they've already done their KYC, even better. All that flows through, and they should be able to get a small cash loan within minutes. And that's what most of our consumers are looking for, whether they're end consumers like you and I, who are in a cash pinch randomly, or they're sole props looking to invest a little bit more in their business, or they're in some other avatar looking for a quick break on cash. So that's what LazyPay serves really beautifully, and it's powered by the cash loans part is powered by the erstwhile PaySense brand. So that's what we're on. It's been a phenomenal 4 months now, or 5 months now, yeah, the lockdown is not helping bringing our cultures together, but we're trying really hard to do that at the same time.
May I ask maybe a slightly more personal question? What is more difficult to set up an entity at the start stage? Maybe when 2015 you started PaySense, or now rebuilding your business or revisiting your business models in the COVID era. So what is more challenging? And obviously you have a even difficult sort of focus of bringing two companies together. So what's more difficult?
That's a very, very good question. I think different challenges. I think, look, let me give you on the 0 to 1, when you're first starting up, you have an idea, you have a vision, you have a very clear sense of like what you want to build. You are evangelizing, right? You're going to potential employees, you're going to potential investors, you're telling yourself a story, and you're saying the all is well all the time, basically, because it is a very tumultuous time, and you're basically going through a bit of ups and downs. You're telling partners that you're going to exist 6 months later, a year later, and that they should trust you, and that they should kind of like support you. So there's like and you're telling customers that your product is different, right? So on all these dimensions, you're evangelizing on customers, investors, employees, partners, and yourself, because I think, and that is a very different, very unique, very 0 to 1-esque kind of set of problems, or challenges, I should say. Now, I think in a larger entity, a different time it's again a different thing, but I think entrepreneurs are well set up even in this time to navigate. So one thing entrepreneurs are like, they're like the river that tries to make it down the mountain, right? Hazar, patthar ho, nahi ho, we find a way down. So that is something that is the only life skill we have learned, because we are constantly faced with hurdles and we know how to navigate down. There is no right path. There is no wrong path, but we're not afraid to try a path, right? So I'll give you an example. It is really, really hard to manage 400 people or 450 people at this time, right? For any CEO, this is a huge challenge to keep so many people motivated, so many people mission-oriented, so many people kind of dedicated to do the work that we need them to get done, need them to do, right? Now, to add to this complexity, if you think about the living conditions, right? Like you and I are sitting in very quiet spaces with like air conditioners running. Most people don't have that. And that's a huge luxury for most of us. So if you look at the living conditions that have now become the work conditions for people, it is actually a very tough working environment, right? So you have to, in some ways, give them something, motivate them to kind of say, well, despite the conditions, despite the hardship, despite what all of us are going through, it is worth focusing on the work, right? And that is a huge challenge. This is, and like I think I agree with a lot of CEOs who've come out and said, this is not a productivity contest, right? This is a prioritization contest. CEOs that don't burn out their teams at this time, CEOs that don't over pressurize their teams to kind of extract the last ounce of productivity, knowing full well that this is a tough time for their people, are the ones that will perhaps live to have a team that will continue to be with them post COVID. So there's no playbook. Of course, there's no like written manual on how to manage your teams during COVID. Everyone's figuring out their own style. Everyone wants to be customer centric because our customers are also going through a lot of pain. Everyone's saying, hey, my partners are going through a whole set of troubles, especially if you're in lending like me. The entire ecosystem is going through a lot of pain. So it's like, it's a juggle, and how do you manage through that? So in fact, what we have done is we have taken the company of 450 and we've broken it down into 5 mini startups, right? So I have 5 CEOs. And I'm not Naam ke Vaste CEOs. These are actual CEOs, and they're running pods, right? These pods are actually cross-functional and single set of objective focused groups that have come together that feel a sense of belonging, right? It's very hard to belong to 450 people, a group of 450, when you don't see each other, when you do once a month town halls, but you can feel very connected, very purpose driven, very mission oriented when the group is only like 15, 20 people, right? So we've come together in small groups and created 5 such groups to actually mission orient and deliver. And that is working really well because, only yesterday we did like a town hall, and each of the pods came in. The pod owners invited various folks from their teams to come and do presentations and demos. Phenomenal. The level of innovation has gone up. The level of passion has gone up. And the sense of belonging is definitely there, right? And that was my biggest fear going into COVID and managing through these COVID times, like you asked, that people will slowly stop belonging. They'll be like, yeah, ye PayU Credit kya hai? What am I doing here? I got to do my bartan, and my wife is yelling and my kids are screaming. So, it just becomes very quickly, it's like, yeah, a very out of body experience. So I think I'm trying to bring everything back, and this is working for us.
Fantastic. So another question from my side is that आपके पास तो you have 3 very strong brands. पूरे तीनों अच्छे powerful brand हैं. You have LazyPay, you have PayU Credit, you have PaySense, and there's this from a perspective of customer. Now they have choices to figure out how do they look at you. So with 3 brands on board, do you want to sort of figure out how will customer look at you as one, or maybe that's a strategy, the way you have the HUL of the world saying that it's like Rexona bhi hai, Lifebuoy bhi hai, and all of that, right? So what's your thought?
Yeah, so look, I think there is a common fallacy that we all kind of fall into, which is that we own the customer. We show the customer what they want to see, and they kind of identify with us the way we want them to identify with us. Actually, that's very much the flip, right? The customer actually identifies with us, sees what they want to see. They kind of create a certain relationship with us, and it's our job to just foster that relationship, right? We are the custodian in some ways rather than the director of that relationship. So I feel that, all 3 brands are very powerful. LazyPay, if I may start there, is a very, very powerful brand, right? So it's a brand that is deep in the customer's mind, is one of trust, one of safety, one of convenience. And it's very lightweight, right? It's very like, it's like, there's not a lot of like hoops to jump through. It's a very simple experience. And it's a beautiful experience. So that's on the LazyPay side, and there are customers who are perhaps in a slightly looking for a slightly different thing that identify with that brand, right? They're looking for convenience. Then there's PaySense, which is a little bit more purpose-driven from a short-term personal loan, quick process, digitized experience, multiple lenders in the background, good from a service standpoint, and a lot of AI innovation thrown into the mix, right? And there are about 7 million customers who identify with that. And they have come through at various points in their journey to look to us to kind of borrow in a pinch, and they identify with that brand. say, hey, actually, no, like, why don't you guys now start thinking about convenience is going to be a bit of a tough sell. And to take this convenience base and say, why don't you start thinking about a little bit more affordability and cash loans is perhaps also a different sell, right? So for now, I think we are, especially at this time, looking to preserve both our brands because the customer identifies deeply with both these brands for very specific things in their head, right? There are things that you go to Google Maps for. There are things you go to Safari for, right? Perhaps in your own world. So there's very specific reasons why you go to different things, where you identify with different brands. And that is hard to unstick. Now, where PayU Credit fits in is that's the umbrella brand, right? At some point, while that's not a customer-facing brand, it is the brand that I think we as a company identify with, right? All the employees of the company don't say, oh, I'm from LazyPay or I'm from PaySense. One of the things we're actively doing with the HR team is to kind of say, well, we all have to identify as one, and that one has to be PayU Credit, right? So that's an employee-centric brand. Now, I think over time, as we look to do more things, we will perhaps birth a new brand, and we'll look to kind of collapse a few of these into that. But at the moment, it's still not something that is ready and baked for more public consumption. So I'll hold on that. But there's definitely a lot of things that we are thinking through at this time because we have the luxury to do so at this particular point, I guess.
I'm sure that is the reason why I think both the brands came together. That's how the merger would have happened, right?
Yeah.
I'm sure you would have a bigger vision to change the ecosystem. In fact, there's another side of it. Many of the payment gateways are independently with that data which they hold right now, getting into the lending side as well.
Yeah.
And many of them are becoming neobanks. Maybe that's for another day.
Yeah.
But how do you think about credit for, let's say, next 6-9 months? What's your vision? What do you think?
Yeah.
And what should government do? What should entrepreneurs like you do to make the ecosystem far more lively?
Yeah. So a few fronts. I'll tell you what we're doing now and how we're thinking about 6 months, 9 months from now. So right now we are lending. We fortunately have an end-to-end digital experience that our customer can go through. So there is no physical contact, and we were one of the few that had that touchless experience even before touchless became a real thing. Now. That said, I think it is really important to understand, let me talk about cash loans first. It's really important to understand who the customer is that's borrowing and why are they borrowing at this time, right? If you look at your traditional requirements, your traditional reasons for borrowing, taking a personal loan, many of those have gone away, right? Weddings, travel, home renovations that were a bit of a luxury, appliance purchases, et cetera, et cetera. Many of those have systematically kind of like just put on the back burner or have fundamentally just gone away. So I think at this time, if people are borrowing, if it's a use case like education, improvement of self, if it's about refinancing, those make a little bit more sense. Not debt consolidation, but refinancing, right? Those make a lot more sense to me. So in fact, at this point, what we're saying is for cash loans, we really want to understand who the consumer is. Is Samir Jaini still employed? Is Samir Jaini still able to service this debt? Will Samir Jaini be able to take on more debt and service it? So it's in one part our responsibility to make sure that when you're borrowing, you don't get into a debt trap just at this time, right? So that you are able to actually responsibly borrow and service those loans. So that's on the person and who they are. On the why they're borrowing, it's more important to understand the end use, right? If consumers come to us and say, we want to borrow for rent, that's a bad end use. I think that is not something we want to propagate. If consumers come to us and want to borrow to pay for a series of lessons, online lessons to pick up a new skill, to upskill, I think that's a fantastic use case. Now I'm just drawing very polar examples for you just to make sure that it's clear. And that's how we think about it. So in the past, personal loans, we would honor a whole set of them, but most of those reasons have gone away. So when people borrow right now, we're very, very curious to know why they're borrowing. That said, I think 6 months from now, if you look at so while on the cash loan side, we've kind of downplayed it a little bit. if you look at what we're doing on the buy now, pay later, merchant checkout finance, the efforts that the LazyPay team is pushing, that is at pretty much at an all-time high. Because people are, and now that Swiggy and everything is opened back up, I think people are, eating out. People may not be going to a movie theater to watch a movie, but they are eating out. People are again starting to spend because there is a lot of pent-up consumer demand that is kind of starting to show. People are going back to Amazon to buy products. People are going to Flipkart, and those are all places where we want to kind of drive a little bit more affordability, right? So examples. We are all of a sudden seeing a lot of interest in perhaps buying air conditioners this year, right? And kind of financing it. It's because people are at home. Like I said, we all have to make our home working environment a little bit more conducive to being able to productivity, right? People are perhaps going to buy a lot of laptops this year. People are perhaps going to buy slightly better phones. These are all upskill, improvement of self type of use cases, and we want to promote those use cases versus a personal loan for perhaps a wedding or a travel, which both of those are not happening at that grand scale anymore. I think in 6 months, we also see a category of people that were hard to lend to coming back, which is around sole proprietors. I'm a huge believer in sole proprietors because I think they drive the economy. And so sole proprietors, as I define it, are people who have a business function, but it's very hard to differentiate between the business kya hai, person kaun hai, right? Like it is one and the same. So you look at Samir Jaini and Samir Jaini, the business as a service provider, and they're both the same. You may be a personal trainer, you may be a masseuse, you may be an acupressurist, you may be a pastry chef, you may be even a kirana store owner, right? So there is no real difference between the person and the business. It's hard to underwrite the business as a standalone. And often we see the person borrowing on self in order to fund the business, right? We always saw that. And now I think what we're seeing is there are some businesses that are highly resilient, some sole proprietors that are highly resilient. They're not over-indexed on debt, and they are looking to systematically take on credit to better themselves, better their business. I have seen a massive spike in the neighborhood kirana store because people don't have much of a choice, right? And people are now back to comfortably kind of shopping from their local stores in this time of lockdown. And I think now I see that kirana store also looking to make improvements in how he services his customers. Not a lot of them have gone digital, but I think that some of that opportunity remains. So we are looking to kind of create tailor-made solutions for sole proprietors, right? So there are LazyPay consumers who today come to us and borrow towards their purchases online. But I think there is a flip side to it where there are LazyPay businesses that could benefit from this 30, 40,000 rupees of working capital rotation, etc. So I think that is an area that I am personally bullish on because these are highly resilient people. And if they can survive this lockdown and open up, then I think it's an area to kind of definitely back. It is the backbone of, I think, Indian commerce also. So I think it's a right thing to do.
I totally agree. In fact, so we actually, our firm also similarly falls in the similar category, and everybody categorizes us that these are not trustable people. They will be sort of mismanaging. They are not financially literate and stuff like that. So, and also I think that if there's something for which I will give up my consulting at some point in time, would be only one to set up a bank purely for sole proprietors, because they are the most misunderstood set of guys. And typically in the bank you have they move either between a retail bank and corporate bank, and they don't like either in either places, right? So I think it's a good idea to build something for them, and hopefully I'll also get benefit out of it.
Absolutely. I like you said, I think these are people who are actually completely misunderstood and hence underbanked or fairly unbanked, I would say. I think there's a very large percentage of the population that's employed in this way and gainfully employed this way. And there are services that are fundamentally lacking for this population. We see a lot of them on the LazyPay kind of platform. We see a fair bit of them on the PaySense platform as well. But I think the LazyPay platform is slightly better suited to serve them as I see it today.
Perfect.